Before getting into bank audit, first let's understand the terminology that is used in bank audit chapter. First, authorized means to get official permission. Authenticated means one's identity verified or to be genuine or valid. Drawing power means maximum amount a borrower can withdraw based on current assets or current liabilities. Screening means to verify customer and transaction data with data that is available in database. Then merchant. Merchant means a business that accepts payments through credit or debit cards, digital wallet or any other electronic means. Appropriate. In banking, it means something suitable or relevant to a situation related to regulations, financial or risk management. Secured means backed by asset. Unsecured, not backed by asset. NPA, non-performing asset. The general meaning is a loan to which borrower stopped making payments of principal or interest for more than or equal to 90 days. Overdue means loan or advance not settled even after the due date. Invoke means to demand payment based on guarantee terms. Recourse means in case of default of loan, right to collect outstanding debt even in collateral asset is not sufficient to cover the debt. DTL means demand and time liabilities. Demand liability means fund withdrawn on demand. Time liabilities means fund held for specific period like fixed deposits. Linked branch means branch that is connected to larger network of branches. Bank audit. Statutory central audit appoint 4 or more CA firms. Statutory branch audit by single CA firm. Auditor of nationalized bank appointed through board of directors. Auditor of banking company appointed at AGM of shareholders. RBI approval is required in both the cases. Special audit considerations in audit of bank. Considerations means factors or elements to be taken into account. First, it is scale of banking operations, extensive dependence on IT, risk associated with transactions, statutory and regulatory requirements, new services and banking practices. Process of conducting bank audit. First, initial considerations. Before terms of engagement and communication with previous auditor, it is acceptance and continuance and declare indebtedness. Planning, establish engagement team. Understanding environment including internal control, bank accounting process. Instead of risk assessment process, here it is risk management process, which includes those charged with governance, oversight, control activities, monitoring of risk, reliable information system, monitoring activities. Risk assessment. Identify and assess risk of material misstatement, assess risk of fraud, specified risk. Execution, engagement team discussion, response to assessed risk, audit materiality, going concern. Reporting, audit report, long form audit report, report to bank or regulator. Bank share following information with auditor regarding IT environment. First, it is overall IT policy, data processing, data interface. Data interface means a device that is used to communicate with computer. Data integrity means accurate, consistent and completeness of data, and then data security. Next, controls. Next, MIS reports, major exception reports. Next, key security aspects auditor needs to address, and he has to ensure that authorized or accurate and complete data are available. System restarts without distorting records. Distorting means in simple language it is without destroying or altering. Prevent unauthorized amendments. Verify. Segregation of duty, system access. Changes made are authenticated. Exceptional reports authorized. Exceptional means unusual reports. Next, areas of internal controls in bank. First, coming to cash. Joint custody, test check daily. Cashier has no access to customer ledger accounts. Vouchers passed by authorized officer for payment. High value receipts and payments verified by higher officer. Loans and advances obtain credit worthiness and sanction from proper officers, documents executed by parties, sufficient margin kept, all securities kept in joint custody and registered in bank's name, all accounts kept within drawing power and sanction limit, additional temporary limit maximum 20% of existing limit and 90 days tenure. If it exceeds the limit, brought to management. Operations reviewed at least once in a year. Next, coming to credit card operations. Credit card operations, effective screening, control over storage and issue of cards, prompt reporting by merchants, statements are sent regularly, follow up customer payments, review of cardholder accounts. Verification. Verification of classification of provision. Classification of advances through CBS, Core Banking Solutions, which is a centralized software. Classification, whether it is appropriate. Secured and unsecured portions segregated. Compare date of NPA of loans. Compare date of NPA of loans. Segregated correctly and provisions are calculated properly. Drawing power calculation as per Board of Director guidelines. Special considerations to creditors and stocks calculated carefully for advances to construction business. Stock auditor's report is reviewed. Accounts regularized near balance sheet date. Payment through genuine sources, not NPA. If indicates inherent weakness, then it is deemed as NPA. NPA recognized on basis of past due or overdue concept but not on the basis of balance sheet date. Limits not reviewed within 180 days from the date of not reviewed within 180 days from due date, then considered as NPA. Accounts with temporary deficiency, not NPA due to temporary deficiency. Stock statements not to be older than 3 months. Asset classification borrower wise and not facility wise. If become irregular, all facilities treated as NPA. Government guaranteed advances, if become NPA, inherent income recognized only when realized. Treated as NPA, central government guaranteed advances only when repudiates its guarantee. Repudiates means refusing its guarantee. If not invoked but has long overdue. Not invoked means not demanding even though it has long overdue, then reported in LFAR, long form audit report. And treated as NPA if state government guaranteed advances remains overdue for more than 90 days. Agricultural advances applied as per crop season listed in circular. Agricultural advances not specified in circular, NPA on same basis as non-agricultural advances. Restructured advances may involve modification of terms. Banks cannot restructure with retrospective effect. Account degraded from standard to substandard. Sale or purchase of NPA. Auditor examine policy laid down by Board of Directors. Only such NPAs sold which remain NPA for at least 2 years without recourse. Sold at cash basis only. Post sale not assume any risk. Not purchase NPA which it originally sold. Sale below net book value, shortfall is debited to P&L. Sale more than net book value, excess utilized to meet loss on sale of other NPA. Any recovery from NPA purchased first adjusted against its acquisition and excess recognized as profit. Coming to capital. Tier 1 capital, share capital or disclosed reserves. Tier 2 capital, certain reserves and subordinated debt. Loss absorption capacity is lower than Tier 1 capital. CAR is equal to eligible total capital funds divided by risk weighted assets and off balance sheet items into 100. Minimum CAR is 9%. Borrowings, obtain confirmation certificate or comply with SA 505. Examine distinction between rediscount and refinance. Borrowings at short notice are authorized. Bills payable, evaluate control over drafts, mail transfers, Unused forms kept in custody, reliable private code, signature on demand draft is checked. Contingent liability, disclosure requirement, claims not acknowledged as debts, liability for partly paid investment or outstanding forward or derivative contracts, guarantee given. Management representation that all off-balance sheet transactions account and entered after due procedure supported by underlying documents. Year-end contingent liability is disclosed, not include any crystallized liability which requires provision in financial statements. Audit procedure, completeness or reasonableness of year-end contingent liabilities, review of minutes of board meeting. Outstanding claims from management, forward exchange contracts, adequate internal control over guarantees, unused guarantee forms, letter of credit. Advances, audit procedures, check installments, EMI, rate of interest, examine large advances on sample basis, problem accounts not yet NPA, accounts adversely commented, restructured accounts list. Recoverability of advances, review, public statements submitted by borrowers, latest financial statements of borrowers, auditor's report of borrowers. CRR, cash reserve ratio, minimum fraction of deposits hold as reserve with RBI. SLR, statutory liquidity ratio, banks to maintain liquid assets, cash, gold before providing credit. Audit procedures with respect to CRR and SLR. Verify compliance with SLR of 12 odd dates not being Fridays. Understanding of circulars by RBI. Consolidations include information of all branches regarding DTL, demand and time liabilities, DTL computation, demand and time liabilities included in liability. Net credit balance in branch accounts, abroad borrowings, adverse balance in nostro account, interest accrued in deposits whether or not accounted in books of accounts, outstanding liability, cash collaterals received under collateralized derivative transactions. Excluded from liability. Paid up share capital, reserves and surplus, loan from RBI, bad debts, part recoveries, amount against import bills in rupees, unadjusted deposits, balance in linked branches or shares, balances in linked branches related to shares, debentures paid but not adjusted by linked branches, margin held in deposits, bills discounted and approved by RBI, net income tax provision, amount received from DICGC held by banks pending adjustments, ECGC by invoking guarantee. Ad hoc settlement of claim received from insurance company, received from court receiver, net unrealized gain, loss arising from derivative transactions, annual charges, other fees not refundable. Limit under bankers acceptance facility. Auditor's report. First one, reporting central government in case of nationalized banks. Auditor called for explanation or information, balance sheet, true and fair view, P&L account, true balance, transactions within power of bank, returns from branches adequate. Reporting matters, Companies Act 2013. Report matters covered by section 143 of Companies Act 2013. Report also covers pending litigations, material foreseeable losses on contracts, delay in transfer to IEPF fund, dividend declared or paid, accounting software for recording audit trail, CARO not applicable to banking company. Next, LFAR, long form audit report. LFAR for branch auditors, observations or comments on cash, bank balance or advances, etc. Branch LFAR submitted for consolidation to statutory central auditors. They submit it to management. Long form audit report, LFAR with board directors submitted to RBI. LFAR with board, I'm repeating this again. LFAR long form audit report with board directions submitted to RBI within 60 days of LFAR submission by stat auditors. Next, coming to other reports and certificates, report on internal control effectiveness, section 143.12, SLR requirements, certificate on corporate governance. The last concept, this is concurrent audit, meaning verification of transactions as and when transaction takes place, similar to internal audit. Appointment of concurrent auditors done by bank own staff or external auditors. Audit committee of board of directors decide maximum tenure of external concurrent auditor not more than 5 years. Condition for one concurrent, I'm repeating this again, condition for concurrent auditor is one branch equal to not more than for 3 years. And if external concurrent auditor, if there are any serious irregularities in his workings, appointment is cancelled and reported to RBI and ICAI. Scope determined by inspection and audit report of bank with approval of audit committee of board of directors. Guidelines issued by RBI. Areas covered: cash or deposits, advance, investments, housekeeping and other items. Audit procedures, audit procedures coming to advances. Sanctions properly, securities received, follow-up is proper, bank guarantee recorded, classification of advances as per RBI guidelines. Now coming to foreign exchange, inward and outward remittances are accounted, extension and cancellation of forward contracts, nostro account balance within limits, reconciliation of nostro and vostro accounts, adherence to RBI guidelines. Reporting in concurrent audit. Reporting in structured format, zone-wise reporting. Before submission, discuss with branch manager. Serious irregularities reported to head office. Fraudulent transactions reported to inspection and audit department. Follow-up action. This is end of bank audit. Thank you.